Hello there, welcome to my channel. In this episode, we'll be discussing everything accounting. That is to say, we'll be highlighting the basic things you need to know about accounting. Let's liken accounting as making a diary. Have you heard about diaries before? Hope you understand what I mean by making diaries. Now let's continue. Diaries provide intimate records of one's thoughts, feelings, experiences, while accounting provides systematic record of the organization's financial activities. In diaries, one could record events, appointments, and meetings, while accounting involves the record of financial activities in the organization. But hey, accounting doesn't mean the same with diaries. Diaries involves private and personal matters, while accounting involves issues that relates to financial information which external users need to enable them make informed decisions. Now, who are these stakeholders? They include shareholders, investors, creditors, management, and regulatory bodies.
Welcome to Accounting Media with Ian Obasi.
Accounting is a systematic process of identifying, recording, measuring, classifying, verifying, summarizing, interpreting, and communicating financial information of an organization to various stakeholders. These stakeholders are shareholders, investors, creditors, management, and regulatory bodies. Remember, these stakeholders have different interests in the organization. A shareholder, otherwise known as the owners of the business, expects returns on their investment. They actually pay dividend. What else are they paid? Yes, dividend. Shareholders are usually paid dividend from profits made by the organization, maybe yearly. Investors, on the other hand, are interested on the accounting system of an organization because they want to know if that firm has financial prospects. Nobody wants to invest in a business that will shut down tomorrow due to bankruptcy or something, That is, investors want to know if they will make returns on the money they intend investing in that company. Accounting involves collection, analysis, and reporting of financial data to help users make informed decisions about the allocation of resources, assessment of performance, and evaluation of financial position. Here is the fact. From keeping accounting records of transactions in your business, you produce financial statements or financial reports. The importance of accounting lies in its ability to promote financial transparency, compliance with regulations, and performance evaluation, ultimately contributing to the success and sustainability of organizations. Now let's talk about the key components of accounting. Let's start with identification. Identifying financial transactions and events that affect the organization's financial position and performance. For example, when the business makes sales, you have to recognize it. After the sales, was cash paid by the customer or was it actually made on credit? All these are what accounting is all about. You have to identify something before you talk of recording it, right? Now let's talk of recording. Recording financial transactions and events in a systematic and chronological manner, using journals, ledgers, and other accounting records. I know you might be wondering what journals and ledgers are. Let's leave the talk for some other time, although accountants should know better. Now let's talk of measurement. Accounting deals with measurement of financial effect of transactions and events. Let's say you bought something. That means you made purchases, right? How much is it? It's all considered here. Now let's talk of classification. Accounting also deals with classifying financial transactions and events into different categories such as assets, liabilities, equity, revenues, and expenses. Right, so let's talk of summarization. So many transactions happen in a typical business within a day, month, or even a year. Example, collection of loans, issue of shares, sale of goods, purchase of raw materials, and so on. These transactions need to be summarized for it to make more sense. Accounting takes care of these, summarizing financial data into financial statements such as balance sheet, income statement, and cash flow statement. Let's talk of interpretation. Accounting involves interpreting financial data to provide insight into the organization's financial performance, position, and prospects. Let's talk of communication. Communicating financial information to various stakeholders through financial reports, management reports, and other means.